Good morning, traders. Welcome to Friday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump in, as always, we want to make sure that we know what's going on, what news is going on, events, etc. That way we're not taken by surprise by anything. So looking at the news for today, one of the big news announcements for today is going to be the PPI at 8:30. The forecast is 0.2%. The previous was 0.3%. And then everything else is relatively small. It's all of those CFTC speculative net positions. None of those really move the markets a whole lot. So the only thing that we've got today, 8:30 news, PPI. We've got some Michigan news at 10 o'clock, and, well, that's really about it. FOMC member Quarles speaking at 12:40, and then the U.S. Baker Hughes oil rig count at 1,300. But that's it. So pretty calm day in terms of news. We've got some at 8:30, but hopefully we can get things moving. Keep in mind as well, looking at the volume side of things, volume has not rolled over yet. I'm looking at the volume here for the S&P, the NASDAQ, etc., and we can still see that the majority of the volume is on December. So likely Monday will be rolling over. But as of today, at least so far, I'm still going to be looking at the December contracts. So with that out of the way, let's jump into some charts for today. Today's date is 12/11 of 2020. First market up on the list is the NASDAQ, and the NASDAQ is just kind of going sideways as expected, right? This isn't much of a surprise at all. This is what we've been talking about. Typically, when you have a giant move in one direction, it's either going to continue or it's going to try to continue, fail, and then go sideways. And it looks like it tried to continue. We had a nice little breakdown there and then just quickly shot right back up. And now we're going a little bit sideways back towards the lows. So realistically, this is much more like a range. Buy low, sell high, and just kind of stay out of the middle. If we zoom out really, really far, obviously the market is bullish, right? I don't think that really needs to even be said, but the big structural breakdown point was that channel low. And with a channel low breakdown like that, or the wedge, or however you want to draw it up, there's a couple ways. The likely situation whenever you break through structure like that is for the market to want to come back and retest it. That's kind of the proving grounds. And we obviously haven't had that yet. Now, this move up, I mean, that might be it, right? But the way that things are moving, at least, it's trying to grind its way back down towards the lows of support. And there's a ton of support down here. The issue for the NASDAQ is that support could come on a three-press low as shallow as this, or it could come on a three-press low as aggressive as this, where it's all of a sudden, way down here. There's a lot of scenarios that can happen to the NASDAQ today, and there's a lot of catalysts, right? We've got split volume. We've got the end of the week. We're going into December. There's a lot of stuff going on that could definitely throw these markets for a loop, so just be careful today. S&P is up next and continuing its downward descent. The S&P does seem to be a little bit more bearish than the NASDAQ. But again, realistically, when we zoom out and we look at what's going on, the S&P is just starting to break through the lows of support. The NASDAQ, if you remember, the support level was way up here, right? We kind of ripped through that already. The S&P, well, we don't have that same situation. So it's taken a little bit longer, and you can also see there is definitely a possibility that they've been trying to get a bounce off of some form of a three-press low. The most obvious one now is just a bit further down towards those 36.28s, 27s. If the market can find some support there, that's likely where a lot of sellers will be taking profit, right down towards that S3, bottom of the wedge. And from there, it's kind of a matter of seeing whether or not they're going to follow through. Because if we look backward, again, we were talking about this yesterday, there's not much to hold the market up until at least like 36.15. And then it starts getting more interesting around the 3600s. And it's hovering, a good 30 points above that yet. That's a tough spot. There could still be potentially a lot of room to go to the downside for the S&P. Gold up next and going nice wedge sideways. I mean, just like most of the markets, big move down. Now we're consolidating. We can see lower highs, higher lows. More recently, it is trying to break through the bottom. So sellers are attempting to get a downward move. Obviously, the big thing that stands out here is when we zoom out, we can see that there is a ton of support inside here and resistance. Everything kind of culminating together to create a really, really strong band of support, and the market is defending it again. So seeing it come back to this zone, even though it is breaking through the wedge bottoms, and it's got a few things that are definitely, they could be considered wrong with it or red flags, given the context and the fact that the market's still holding the support at 18, we'll just say 1828, realistically, as long as that zone's still holding, you got a shot to keep it going higher. If it does break, then we don't really have anything until like 1817, so buyers are going to really want to see that hold higher than that. But if it does start breaking down, there are a few areas of interest. If this move down becomes a failure and it starts turning higher, it's likely going to keep going higher for the rest of the day, because that would potentially signify a reversal of this move down. Kind of like what we had over here. Up move, sideways, finally started breaking down in reverse. Now I've got the big move down, sideways. What does it want to do, right? Are we going for a second bear leg, or are we going to reverse it right back up again? That's the big question that we're waiting for when it comes to gold. And, well, right now, the bears are in control. I just don't want to sell this far down in this kind of market. I would rather look for a dip into support for buyers to come back in and defend. And then over on crude oil, we have crude oil rallying aggressively higher, and it's finally taking a little bit of a pause. Yesterday it ripped all the way up to 47.69, and then backed off a little bit on the January contract, where we're now finding some resistance at 47.30s or so. Lots of swing high resistances around there, and it seems to be just kind of putting a cap on the market for now. Now, that said, the way that the market's moving, it wouldn't be a surprise at all to see some form of a sideways consolidation before a breakout, seeing some form of an accumulation bottom. We're coming into the bottom of the channel, the bottom of the other channel. Previous kind of structured support. It could be a little bit further up. So it's creating kind of this zone of interest here that buyers may want to defend. The problem, obviously, is that if they can't defend up here, then this is starting to scream overexertion. And when it overextends like that, it's usually going to want to pull back. And that would mean that the pullback zone would start dipping down towards like the 44s. So if it doesn't want to hold here, that's fine. But the bulls might start running into some issues. Then on the currency side of things with the euro, it tried breaking above the channel highs, and it tried doing it twice, actually. We had that first attempt, which was a total failure. And then the second one, which looked a little bit better, but then they hit that 21,595 resistance and just got chunked all the way back down. Effectively tried breaking above the previous swing high, tried doing it again, and landed flat on their face. The overall sideways movement, this is the chance for buyers to try to prove something. We've got the breakout pull back to the channel. If they're going to want to continue higher, this is the spot. That said, with this amount of strength to the downside and such a strong, persistent failure off the top, it wouldn't be a surprise at all to see the euro try to challenge that 1.21 area, maybe even down below that to the 207.65. Lots of levels of support below. It's just a little far up here to want to really do much. It's hanging out on balance. We've got to see it make a decision and get out of the middle of the range, preferably. It'd be nice to see it at one of the extremes. And then finally, we've got ourselves some crypto. Good old Bitcoin. Nice little wedge formation going on here on Bitcoin. The way that things are moving, we've got this nice little wedge breakout that's attempting to gain some ground below the lows. And when you have a breakout that is going to be successful, typically the breakout will have the first drive down, they'll have the breakout pullback, all the ubiquitous things that you would expect to see. And another new low and continuation. You'll notice they're staying low, right? The market is holding it down. That's a good sign. If the buyers were trying to take over, they'd be cracking above these previous swings more often. They'd have higher low pullbacks occasionally. They'd have something else going on. But so far, it's just been getting buried. So with that in mind, Bitcoin just doesn't look like it's ready to bounce yet. Buyers are still interested, obviously, but we might be able to get that dip back to the 16 sooner than I thought. Realistically, when we zoom out and we look at the bigger picture, it's not really, it's not doing much, we had this really nice sideways wedge that broke out and had just that massive rally all the way up to almost 20,000. And as soon as it hit that high, it got just clubbed. The big thing here is if you're looking at that giant move, the high and low of it, right? Just like all of the big news announcement candles or anything like that, that's going to become a zone of interest. And sure enough, that's what we're fighting over right now. And until the buyers are able to get back above that, I just don't see a reason to want to really go long yet, other than, maybe like dollar cost averaging stuff. But as far as positioning goes, it just doesn't look like the buyers are ready yet. Alrighty, well, that's going to do it for today and for the week. Stay safe out there, keep those stops in play, and let the winners run. And as we go into the weekend, as always, make sure to take some time away, get a break, get some mental rest in. As traders, we make more decisions in one day than most people make in a week. We need to give ourselves some rest, and we're coming into December. This is the time when rest starts creeping in. Don't forget, Christmas is around the corner, holidays are all over the place. I mean, this is a weird, crazy time of year. And now with the pandemic, oh, man, what a mess. So just stay safe out there. Make sure to get some rest, ready to rock and roll for next week, because next week, man, we might have some fireworks. We'll have to wait and see. But stay tuned, rest up, enjoy. I hope you have a great trading day, and we will see you all next week. Thanks.